it continues to find a market. I think that fundamentally is the challenge, and create jobs, productive jobs. Because you'll be just showing some data. For the first time on this show, we're going to pivot and show some data which will help us sort of open this conversation. But I think productive jobs, specifically jobs that create a certain degree of economic, at some level, prosperity, and take also the intellectual properties that we are hoping to sort of build upon over the next 5 to 10 years, those forward. So we're not just talking about gig work, we're talking about real productive jobs that will help in sort of transitioning the economy.
Yeah, the ideal job, the job that people are doing for to survive. The EU deal, Rajiv ji, they say 80 lakhs to 1 crore jobs it can create. But by the time the EU Parliament ratifies it, will be in 2027. So let me just open it up to you, and you can set it up to say, you see it as a problem or opportunity, the current situation.
Anand, you asked the other question, which is how to firewall the Indian economy. And my sort of single point take on that is that you can do that by empowering, supporting, promoting the private enterprise in this country and reducing the regulatory and compliance burden that really just kills it in a way. I mean, for times immemorial, it has been the private enterprise who took India to its glorious past, ruled the waves, got the Silk Route, etc. But over the years, what we've seen is that this sector has been restrained and constrained, and the Prime Minister has sort of said it quite often, to remove the 62,000 regulatory compliance burden. So I think if the budget can actually, if you like, my specific suggestion is, because lots of these compliances are in the states, so maybe you could set up a council of states for reducing compliance burden and get all the the secretaries.
You should direct it towards the former Babus to your right. They have to answer.
But the point is that they are the latest generation. These have occurred over decades, and now they need to be, this whole cobweb has to be removed. And if we can do that in this budget in a tangible manner, not just spin, not just talk, but in a tangible manner with a time bound, with a timeline, saying that by the end of this year or the next budget will actually present what has been achieved in this crisis. I think that will be the best way to firewall.
They've done something with the labor codes, but is it possible to try and bring, even now it is some 5,000 compliances, even if you have to start something.
Deregulation is what is required.
Sumita ji.
Yes, see the labor reforms.
Gail Saab is having a nice laugh. Dekhiye that chuckle on his face, but please, yes.
See, the labor reforms, the labor codes are historic, and we are waiting for them to be operationalized. I think they're going to be a game changer because they've simplified a lot of labor compliances, labor-related compliances, a single return, single registration, single license. And they've also brought in deemed approvals. They made it easier to do business. They made it easier, more to scale up industry. So far, we were disincentivizing scaling up, but now it becomes an incentive to scale up. It's easier to scale up during seasonal orders, export orders, more welfare for the workers, more productivity because they get timely wages, minimum wages becomes a right. So I think there are huge number of interventions which would formalize the economy, and this is all going to take us towards growth. However, since we are talking about states, we are talking about states getting a bigger role, I think this budget would be a great opportunity to bring about more economic decentralization and a clearer industrial policy, and also under the labor codes giving a very clear mandate to the states where is the flexibility for them to be able to bring in more investors.
True, but the numbers suggest that investors are gun shy, and that's really where the problem lies. Because at the end of the day, I mean, Nalin, would you, and Mr. Mehrotra, would you like to pitch in on this? Why is the investment taking such a long view that they're not even committing themselves? I mean, we'll show you some numbers, and that will sort of amplify the point. But why is that happening?
Because there is extreme regulatory uncertainty. You don't know if you do A, will you get B, C, or D. And you commit investment for long term.
So clearly, Mr. Kumar, we've identified the problem, but why aren't we being able to sort of do something about it?
If we thought that regulation alone is the reason why the jobs are not coming, then the regulations have been there for the longest time. So really we have to ask the next question, surely there is something else here. And that's something else, is something that's so far not been mentioned, and that is aggregate demand. And because aggregate demand is not is not showing any robustness, that's the main reason why for such a long time private investment has been tepid. And not just private investment, foreign capital has ceased to come in. So private investment in the last 10 or 11 years, investment to GDP ratio in the last 10 to 11 years has been in the range of 26 to 32%.
Yeah.
Compared to that, in the preceding 10 years, it used to be between 32 and 38%. That was the range then. That's how you got, rates of growth of 7.8%.
Since he's saying it, let's have a look
and
at
I'd
those
like the
numbers.
businessman also to weigh in. Why is business gun shy?
So, one, it's nice to be part of the Navratnas here, so the 9 of us. I think there has been, there are two issues. One is that our businesses, when they invest, are gun shy, one, because of the losses they suffered in the 2000s when there was overcapacity. But more than that, I don't think our businesses have adequately decided to be innovative enough in spending in R&D to look at new products, new markets. So they're waiting for, if the widget demand is going up, then we'll invest in that. But guess what? There is something different that they can do, and I just don't think there is enough of that. And that requires capital. It requires capital in a big way, which is where I hope this budget will actually be moving some capital towards new scale R&D rather than 200 institutions. One last point, we keep talking about simplifying approvals. I think we need to take a new approach. We need to remove the requirement of approvals in a lot of cases. One window, it never works. I mean, apologies, it has never worked, will never work. We need to remove the reasons for approval. There are digital means of verifying whether people are actually in compliance or not. If they're not in compliance, fine them heavily and make it punitive. And let it be a transparent system. But, one window, one budget, one table, all that, no poor businessman, I mean, even in tax, as we know, it never happens.
But the reality is, half is within the union list, half is in the concurrent list. Between the state and the center, it's just, Garg Saab, please tell us, how are we going to solve this? A person makes a full factory and then does not get approval because आपकी CD जो exit की जो CD है, उसमें एक CD कम है and fire department won't give you approval. Now,
see, this is the budget of the government of India we are talking. So let us talk about what the government of India can do, even about the deregulations and all. State budgets we can handle separately. The budget is basically about finance. And giving productive push to the industries to generate more GDP, more incomes for the country, more investment. So if we look at from that point of view, you started by saying, how do you fireproof? I said this is a very wrong way to approach it. We don't need to fireproof. We need to integrate with the world. Correct. How do we win over the world? Do we have any products which we can sell to the world? We have done this EU deal. I think it's a very nice deal. The government of India has sort of shown the courage to sort of take the bull by the horn, reduce the tariffs to such a drastic level. Because these have they have not protected Indian industry. They have made Indian industry weak. They are not able to compete with the world. Now, if you bring it out,
don't write them off so early. I mean, they will try. Obviously, they will.
The Indian industry has performed very well whenever they have been made to compete.
Yes.
That is when they do it. When they have been overprotected, they have taken the route to sort of skim the government from subsidies and other kind of things, or the tariffs protection for fleecing the consumers.
So Rahul, I want to go back to the point you started with. See, net FDI this year has been down. If you look at FIIs, look at the stock markets, for example, we've been saved by domestic investors, and that base has really increased. Because till a couple of years back, it was the FIIs who dictated what was happening. If we didn't have so much of new investors coming in, our market would have been in a pretty bad shape. So now there are some green shoots. We've had some big ticket investments in the last month or so. Look at that big data center investments by Google, by Microsoft, by Amazon, and so on and so forth. There's some green shoots there. But fundamentally, I think the reason why FDI is looking a little bit weak, or net FDI is looking a little bit weak, partly because people are monetizing, partly people are sort of, we've had a big IPO boom, so people are sort of monetizing on their past investments, but partly because there is an uncertain global environment, and India is not as attractive necessarily as many other markets look, including the US,
yes.
Paradoxically. Yes. So, there's an old aphorism, India only reforms when there is no alternative. You look at the 91 reforms, there was an external crisis. This year, post-Sindoor, there has been a realization that you really need to do fundamentally different things, which is why you've seen a slew of measures. You mentioned the labor codes. That's just one of the measures. You've seen a real opening up in the defense sector. You've seen the labor codes were not passed this year. They were passed 3 or 4 years back. Yeah. But the government has got the political will this year to push it through for implementation. You've seen a lot of measures around ease of doing business, including on removing quality control orders. But remember, these quality control orders for exporters were put in place some time back. So what you're doing is removing cobwebs of our own cobwebs, right?
Certain areas.
67 of them.
Exactly.
And only a few have been removed.
Exactly.
But
more than 870,
exactly.
which have all been brought after 2021.
That's true. I mean, look,
So
it's
the
a
point,
mixed
Rahul, I
bag.
do want to make one last point. So
Yeah.
the point is that we even feel very happy that we've removed these things because we are better than we were 2 months ago. But that's not the measure. The measure is, are you better than Singapore, or are you better than Dubai, or are you better than
Because
See, my thing is
we're in a
starting.
world like this, you're competing for capital.
Very simply put, look, we're in a situation today where I think we have to look at other trade partners. So when there was a China +1, when it became supply chain, today we need to look at other markets. I think the discussion on having inter-regional trade within Asia has been something which is ongoing for a while. So to that extent, I think the FTA with the EU is fantastic because as Dr. Garg said, at the end of the day, it is taking the bulls by the horn. But also to the point of ease of doing business, and the center state concurrent is something we have to grapple with for quite a while. And notwithstanding, I mean, even the labor codes was a great time also to probably look at gig economy, gig regulations, and I have my own reservations about how the labor codes are going to deal with that. But that's for another time. But ease of doing business in very simple terms. So I'll give you an example. And this is something we brought up to SEBI and it's been repeatedly said. So something as simple as, let's say somebody from abroad wants to set up a company in India. Yeah. So you register, the registration happens in 1 day, great. Yeah. But then your PAN card, your any other thing, all has to go back to the home country where they stay and then rerouted. Something as simple as them not being able to receive documentation or ID is very simple. This is ease of doing business, right? Yep. So when you say registration can happen in 1 day, but everything else that follows it is still going to take you that long, it makes
somebody,
no sense.
I was having this conversation, we'll just put out those numbers. Somebody just said, listen, I've got $1 million. Can I start up a business and set up shop in 2 days' time?
No.
No. If I can't do that, then
2
you're
months.
not making it easy
2
for me to
months.
bring in $1 million.
Absolutely, like Saket
No,
says, 2 months.
it's not. And then he said another thing. Okay, you won't do it in 2 days. Can you do it in 2 weeks? Okay, forget 2 weeks. I have Indian roots, so I'll wait for 2 months. After 2 months also, I'm not able to do it. So it's all on paper.
Saket,
Why is it not
talk us
happening?
through this. I mean,
Anand,
what
this
is so
why-
difficult?
No, you've discussed it enough. You know the issue. I was offering a
Solution.
tangible
Yeah,
solution,
Yeah.
which is that this budget can announce a council for liberalization or compliance removal or regulatory
Deregulation.
simplification,
Yeah.
where all the states come in on board and all of them get a timeline target to say, to do this, because more than half of the regulatory problems are in the states. The rubber meets in the so now therefore Subhash, the thing is that even with the PLI scheme, even with export promotion, etc., what you promise you don't deliver, and therefore you got to have this particular mechanism to oversee and a regular oversight on what's happening.
So if it can
if
if it can work with the GST council, why don't we get all the states to form a council to say deregulate?
Again,
So let me just bring out some numbers.
Regulation is not the
Yeah.
principal budget issue. By the way, let me just explain to you. Last year they announced the regulatory commission to take off the regulations, right? Now you're suggesting an alternative, they create a council of states.
Here you have another situation, manufacturing a percentage of GDP. And I just want to ask you, gentlemen, because there's a big debate that is going on. Yes, it's been steady at 13%. It hasn't changed for the last, I think, 15, 20 years now.
No, that's not true.
Okay.
Yeah, but we'll come back to that. You finish what you have to say.
You are saying it's come down.
No, I'm saying
17%.
we shouldn't be.
No, it's not. It's
No,
actually
it's
manufacturing is 13%.
Yeah, it is 13%. So
of
some
GDP.
people say that.
Industry is
Of
17%.
Yes.
It's
There
of.
isn't.
Yeah, anyway, you carry
okay,
on, my
okay,
friend.
okay, one second. But I just want to ask you, should we even be looking at manufacturing in the way that China did? Is it too late for that? Have we just, does that world not exist? I want
We
to
have
hear.
a huge market within our own country. We have no choice but to improve our manufacturing, particularly labor-intensive manufacturing. If we don't have a horizontal industrial policy, we are not going to be able to
Santosh,
create jobs.
This is the fallacy and the myth of a large economy. We are a large population, but not a large economy.
We are-
and unless we
we have a
get
large
aggregate
con-
demand
no, but we
from
have
the
a large
external
But
consumption.
sector.
that's
like
precisely
to-
the point.
We got everybody
let's
chatting.
go
Yes,
one
yes,
by
yes.
one.
That's
Because
why
this is
I
an
was-
interesting
No, it's great,
conversation.
great, great.
Regulate.
I want
No,
to
no,
know,
please.
is the direction make in India for the world, is that a policy statement that China did about 30, 40 years back? Is that still valid? I'm only asking. So
No,
let's,
I'm not giving you,
absolutely
trying to
valid.
give you an answer,
Okay,
Rahul.
yeah.
So the answer is
Yes.
that we have a large enough untapped market within the country that needs to grow. How will it grow? If you go about it in a systematic way by systematically supporting MSMEs, which generate the jobs. If you generate the jobs, then you go back to what Henry Ford was saying. I want to see the day when my car can be bought by my own worker.
Right.
How are you going to do that? That's the way it was working from 2004 to 14.
Saket.
Jobs were growing at the rate of 7.5 million non-farm jobs per annum.
Okay.
That's why we were growing rapidly
Saket.
and creating jobs.
Yes.
I mean, I genuinely don't think that we can only focus on our domestic demand. I think that demand
course not.
is our firewall.
Absolutely.
I think we have
Absolutely.
but the point that Sir is making about the MSME sector, I think that's incredibly important because the greatest
Very
amount of innovation will come from there. The second thing that I think we need to give up and where we need to perhaps change is this manufacturing snobbishness that we have, that we won't do assembly. Well, guess what? Assembly gives jobs to semi-skilled kids
Right.
between the ages of 18 to 28.
Absolutely.
It builds up your brand India around the world. So an Apple phone today which has India, made in India, tomorrow therefore you will have a whole set of industries coming here. So there is, we don't need to do everything that China did.
No, but
we can
but
certainly.
those decades
Saket
are
made the
different
point
in a
with Apple.
day of AI and
PLI
robotics.
scheme in 16, 14, 15 sectors. The one big success is smartphones, where a very large percentage of smartphones are being made in India by Apple and so is Samsung. Now there's a whole debate with people like Raghuram Rajan and so on that the value added is so little. But where do you start from? You start from somewhere.
start
China
from
also started from
somewhere,
here.
exactly.
Yeah.
You'll move
Yes,
up the
Sumita
value
ji.
chain over
Exactly. Yes,
4,
Sumita
5,
ji.
6, 7 years.
Yeah.
See, when it comes to manufacturing, there is every indication that we are going to be much more in manufacturing. I would not hesitate to say a manufacturing powerhouse because for manufacturing we need a number of things, certain preconditions, and that's where the budget can make some announcements and also some allocations. For example, land, we have industrial corridors, industrial parks, more allocations to the SPVs of these industrial corridors. The economic townships need to be better connected with the EXIM gateways. The budget has been talking about it, more allocations, better connectivity, logistics, the logistics related services, bringing in technologies there. Labor we've taken care of, but we need to operationalize that faster. When it comes to PLI for the supply chain manufacturing as well. In China, there's an ecosystem which is created around a product, for instance. So supply chain, PLI would make a lot of sense. Also export related linked incentives, if you are able to export above a scale, all these factors.
Look, I have,
The
I have
other
a
thing
very-
is that in China, most of it is concentrated in certain regions which are closer to the ports and it's not spread across
I was
China,
just
as
going
you
to
say.
come
But
to
here
that.
in
But it's
Bharat, what
improved
we are
a
having,
lot.
each state needs a little
improved
bit
a
of
lot.
a
It's
share.
very
far better.
widespread.
It's
That's
fairly
the way it
widespread now.
began, Anand, but it's fairly become
widespread
fairly
now.
widespread. Otherwise, you wouldn't get the jobs
Get
that
it.
you would.
Gargi,
Look,
yes,
actually,
we get to the other
my
three
take
data
is
points.
slightly different.
Jay.
You manufacture what the future or what the present
Exactly.
is demanding.
Yes.
Correct.
So you look at what is today's demand in India or anywhere in the world. It's essentially concentrated into 3-4 big sectors. Number one, there is a huge energy transition going around. You produce more of the energy, you generate more of the electricity by solar, by wind and other things.
Right.
So there is massive manufacturing happening around the solar cells, wafers and those things. Are we manufacturing that? Then you see there is enormous transition happening even in automobiles. You now have electric vehicles coming all over the world, not the old kind of vehicles. You look at the computers, digitalization, where the world is changing. Smartphones was mentioned, but there is whole lot of other things which are laptops to data centers, machines and those kind. That is where the manufacturing is heading now. And for that, what you need is that do you have the technology to manufacture?
Yes.
Do you have the right kind of investments or entrepreneurs for that? So I call these the new economy products, rather than the old economy products, the steel and equipment.
And not just that.
So for that,
1 second, Rajiv ji wants to come
for
in.
getting the new economy products to be manufactured, if the finance minister can actually bring big, for example, even let us say energy transition. Instead of 500 or something, we aim at much bigger. And can we make India is the manufacturing hub for the entire energy transition products?
Okay, that's a possibility. Rajiv.
Rahul, the fact is that China has preempted most of these sectors. It will be impossible to get into that sector and find it viable for our units to be able to do so and compete with them. You know, there's an old thing in our mindset is that we always go for the semiconductor chips and we feel very inferior about the potato chips. Agro-processing is a manufacturing sector. And our agriculture sector requires 10% value addition is done in the agriculture sector. Why can't it go up to 40%? And why can't it be why can't we be an agro-processing, manufacturing hub and exporter? That's one point. The second point is that the PLI scheme, which was conceived of in Niti Aayog and then went on, was supposed to be a focused thing. Now it's spread to 14 sectors. What the budget can do and should do is reward those sectors where there has been success, increase the incentives there, so that reveal preference, go by what, and punitively punish those where the targets have not been met. That's the basis of any successful industry. And
let's just look at some of the other numbers also quickly.
There's also the jobs trap, this youth unemployment. Now this also feeds into the lack of demand at some level. Look, it holds you back as an economy.
Look,
So
and then
what are we supposed to do?
Can we look at the other numbers?
Let's just have a quick
FDI
look at the other numbers too. Can we go to the next two? Yeah, that's another metric. So record FP. Now this is becoming a concern. Capital is not staying here. Fresh capital is not coming. You have a situation where I'm being told, and I'm looking at all the news reports, Nalin, that in America, for example, after Trump has sort of dawned on them, a lot of Indian businessmen want to come back. But do they necessarily want to come back to India? And is India attractive enough? So this is one issue which has been we're staring at for a while. It's not all negative. So I'll come to the
trade deficit.
I'll come to the great index that Nalin has put together. So not negative. But
and the final number,
and then of course there's the rising trade deficit despite export gains, and this is a problem. It sums it up, doesn't it? All of them are interconnected in a way.
So I think, there are 2 or 3 things here that we need to keep in mind. If you really want manufacturing to step up, the demand, again, as being repeatedly said, has to come from somewhere. Domestic is one. Otherwise, it has to be external. And for certain products. And I think for a while, we've been concentrating on the wrong sectors. Now, personally, I think we've missed the bus in terms of large-scale textile manufacturing. We've got too many competitors, maybe some of it would come back. However, technical textiles has been something that we've been doing well, but we haven't focused on that. Agro-processing, as what Dr. Kumar said, is great. And even to the extent of focusing on green-based, technology-based manufacturing, whether it's solar panels, at least for domestic use, you'll still see a general increase, even if it's not from external sources, but at least domestic. Solar panels, we still don't have them as ubiquitous as needed. These are areas to look at. But largely, even from a job creation point of view, I believe that job creation is going to happen only within the MSME sector. I think the large corporates, you will find them maybe small amounts, but the MSME sector, you help them build capacity with every stage of going up, I think you will create at least one, two jobs.
And this MSME is spread across various disciplines and verticals.
Absolutely.
Now,
But
defense manufacturing is one of the biggest
That's not a job
opportunities.
creation. No, it's very important in its own right. Don't get
Not
me
bulk.
wrong. But I'm saying if we are still talking about jobs, continuing from where ma'am left off, I would say there are 5 sectors which account for 50% of all manufacturing jobs in the country. This wasn't the case in the early 2000s. 50% of all manufacturing jobs come from textiles, garments and apparel, food processing, wood furniture, and leather and footwear. So if half of all manufacturing jobs were coming 10 years ago from this, and that share has declined, there was an absolute decline in these sectors. So clearly what I would expect from the budget is a package for each of these 5 sectors, because if these are, and this is not a PLI, I'm not talking about picking winners within this.
Right.
I'm talking about sectoral package, because if they and that's where all the MSMEs are concentrated
But
on.
are these the only sectors that can generate jobs, or are there other sectors that
They're
need to be
they are
explored?
main ones.
Rajiv,
They're not the only
ones.
I'm just saying, in terms of
There is gems and jewelry,
Yeah.
which has been a very important sector in our country for jobs, especially for jobs. There is also, the low engineering goods sector, which has been there. Auto components have come out as a major exporter. But the key, I must repeat again, is that aggregate demand has to be external plus domestic.
Yeah.
So you've got
Yeah.
to focus on exports, and you've got to therefore have a much sharper focus than what you've had today. Choose 2 or 3 sectors and then go all out for it, because otherwise there's not enough space in this fragmented
Right.
world.
Quick comment
that
from
we've got
Saket
today.
and then Mr. Garg, and then we'll move
I'll
to
just
Nalin.
go
Yeah.
back to the point that Mr. Garg made, and I think, and that Sir made. One is that he talked about things that will be required in the future. And that's where I think we continue in trying to become China 30 years ago, or trying to still, the fact that we have only got 5 sectors that are providing employment means that we have perhaps chosen the wrong sectors. And tomorrow when AI comes, guess what? Potato chips will be made by AI. You won't have a single guy working there.
It's a fully automated
It's
plant.
a fully automated
Yeah.
plant.
It's gone, yeah.
So what
Digital
did
printing.
I'll give you an example. Last year, I think in 1 year, Chinese pharma researchers sold about $20 billion worth of molecules to the West. We today, we became woke perhaps before we became rich. So we don't allow testing on anything bigger than a mice, right? As a result, our pharma research sector, which we can actually build up as a center of competence, cannot grow. They need to either sell the molecule or pay in millions of dollars to others.
Yeah, the other thing is this 1 lakh crore rupees for R&D that
Hasn't
was
started.
parked. I don't know how much of that money has been actually used or tapped into by anybody.
zero.
That's another focus.
That RDI scheme for which 20,000 crore was allocated in this budget, my guess is that not even 200 crores have been used.
Right.
So that is pathetic, but I picked up that number which you showed, the FPI exits,
Yeah,
as well as the FDI downfall.
correct.
I don't remember in many years in India, both these things have moved out together. Right. This is, if we don't take this seriously,
It's impacting our currency.
correct.
It's,
Why dollar is weakening all over the world, but Indian rupee is weakening against the dollar. This shows the seriousness of the crisis. If we don't take note of it and don't take the corrective measures, we'll have a problem. By the way, I have all sympathies with the MSMEs where there is a lot of employment generation which has been happening in the past. But those jobs are at the utmost risk.
yeah.
That is not the future, that is the
That's
past.
the question that I'm glad that the elephant in the room is being painted by you, because fundamentally, as he's saying, disruptive technologies, AI, etc.,
Exactly.
will make these jobs very infirm.
Yeah, very
after a
redundant,
point.
yeah.
So are we actually in the wrong sectors? I mean, is
I
that
would
really?
like to
Yes,
add,
ma'am.
India is doing pretty well in digital services, and that's a growing area, and we have potential to double.
But again,
the,
it's not in the innovation side of things. You see,
yes, there is a need
we're
to have more
solutions
value added,
providers.
and our IT companies should be adding value. But now we are talking about jobs. So that's where there are a lot of jobs and which are expanding. Even with AI, while there may be some jobs which are getting disrupted, but a lot of work in AI modeling and creating models on the open AI systems is going on in India.
Can I ask all of you one GK question?
Particularly the global capability centers are creating a lot of jobs,
True.
so are the startups.
But again, you see, someone else might come and beat us to that model. It only takes someone undercutting. There's Vietnam, there are other economies, and there are other countries that are also learning the English language. There's a lot, there's some Eastern European countries.
Which is true, and we have to be very adaptable,
yeah,
very
but
flexible.
as I said, we need to be at the cutting edge of things if we really have to be global leaders.
The other.
Firstly, our we have structural issues in the economy. The tertiary sector now accounts for 51% of growth, right? Which is the highest since the series began, since the data series began, right? That's one. Two, while we have growth rates of over 7.5% and so on and so forth, a lot of that is being driven by investment by the government. All the data is showing us that private sector capex has not picked up. The bump that you had in consumption with GST and with earlier tax changes earlier, that's kind of tapering off, and there is a question mark on that now. There are fewer things that we need to fix. And coming back to the budget, ease of doing business is really required. You need supply side reforms. I'll give you two examples. Cost of logistics in India is roughly around 9-10% compared to say 4-5% in many other comparative economies. The cost of capital is much higher, say for example compared to China. So when you have a foreign company coming to invest, there's a reason why a lot of Indians are going to Dubai to set up a company. No, why are they not setting up here? There's a reason for that. In China, for example, cost of capital is roughly around 5.5%. So we have to compete with that, and that's why you can't do business as usual. We are talking about GST reforms. Try, if you have a company, try closing down with GST and see how long it takes. Which goes back to what others on the panel were saying.
Because it's not just, when you're looking at ease of doing business, it's not just about ease of starting a business. It's about ease of closing a business, and it's also ease of continuity. And in closing a business, it's not just that, especially when you're looking at innovation. If innovation fails, it doesn't work. How fast are you able to shut and restart something? It's a nightmare.
It's as tough as closing your Instagram or FB account. You can't do that.
There's a problem there.
You can't do that either.
So hang on, we don't want to end on this sort of dirge-like negative note. So Nalin, you need to come up and show us some hope, some glimmer.
That it's not all doom and gloom, is it?
Show us what.
This is a new money control index that we put together, a monthly index of the economy, which gives you a sort of a monthly pulse of where the economy is going compared to the quarterly numbers that come every month to give you an early indicators. My colleague Ishan Gera will join us, who's kind of developed the econometrics of this with a whole bunch of economists. And we'll be putting out these numbers every month. We have some good news for this month, by the way.
So come on, let's have a look at it.
Let's do this.
So Rahul, one of the big problems that investors have is that there's a time lag often in between what's happening in the real economy and official data. So in this world of real-time data and all of that, what we thought is we decided to put together a whole bunch of indicators to get a quick snapshot of what's happening to the economy much ahead of what the official data is telling us. So this is the Money Control Eco Pulse. It tracks about 30 plus indicators, high value indicators of the economy on a real-time basis, and every month it gives you a sense of which side the economy is going. Is it going in a positive direction or in a negative direction? From a very layman's point of view, you can track these indicators separately, or you can there's a complex mathematical economic formula that looks at it together. A score over 50 tells you that compared to the previous month, the economy is doing very well. Below 50, it means that it's kind of, there is a negative shift.
Decline.
So this month, we are launching it today. This month, our score for the Indian economy is 53.7, which means that it's fairly robust. It's compared to November, things have become much better. And my colleague Ishan has developed the econometrics for this. Ishan, let's quickly show how to use this index. So, for example, there are several factors which have driven the economy in December, Ishan.
So what you can do is basically compare the index with other high frequency indicators as well. So for instance, IIP numbers just came in today, which was a 26-month high. It moved to 7.8%, and that was part reason why the index also moved up this time around. Also, if you look at it, the electricity demand also was higher this time around, and it turned positive after a gap of 2 months there. And even in terms of PMI reading moved down, so that was also a contributor.
So there are 3 or 4 things that have moved the economy in the positive direction this month. One is IIP numbers, which came out today. GST collections were at 1.3% higher compared to 0.7 in November. Electricity demand is higher. Retail inflation is lower than 2%. Manrega demand has gone down, and that's a big political touch point this month. That's down by 28.6%. That means that the rural economy is kind of doing better in December than in November. This is comparing it from November to December.
So can you put the Manrega numbers?
Yeah,
the
let's
other
put up
thing
the
is,
Manrega
interestingly,
numbers.
the Operation Sindoor months, before and after, there's a marked slump,
So-
and then it tends to pick up in the overall numbers also.
This is on the positive side. Let's look at the Manrega numbers. So demand is going down. Now you can, there's a debate around what does that indicate, but be that as it may. On the negative side, the PMI composite sentiment, which was a sentiment of business activity, that's gone down a little bit. So that's what is moderating the numbers. That's down. E-way bill generation, which is fundamentally, which shows you transportation and so on, that's down. And also aviation turbine fuels are down in December, which shows you, which looks at air travel and so on. We had the Indigo crisis, all of that. So taken together, you get a snapshot or a direction of the economy.
And do you have a heat map or something like that?
Is there? Let's go to the heat map.
Yeah.
So these are the indicators we are tracking. The ones in green are the ones which are up compared to the previous month. The ones in red are showing you a negative turn. So air passengers are down. Natural gas is down.
January.
This is for December.
December.
The data is all
December.
for December because there's a lag of
So we
about
report
a
it
month when the data
a
is
month
released.
later.
December data?
December
December
data.
data. Yes.
But at some point, you should really show the list of indicators that you are using early on when you make this presentation.
So let's just go to the here. Just go up. The indicators are all here.
It's just that we can't read them.
Yes, sir. So
Yeah.
what I would refer here is that if you go to the site, there's a very detailed economic note with all the methodology and the calculations and so on. There's also an economic advisory panel that kind of vetted our econometrics. People like Lavish Bhandari, Shubhashish Gangopadhyay, D.K. Srivastav, who's advising on the Finance Commission, Amitandu Palit at NUS. So we've done, last few months, we've been testing the methodology out. We also looked at the correlation to the GDP. There's a kind of a 90% GDP correlation, GDP numbers correlation that we found. But we've tested out for 7-8 months, and now we're releasing the out.
Test it against the economic survey.
We will.
We'll have to test these indicators versus the economic survey. That's what will have to be done.
The idea is that every month, this index, while individual indicators get updated as they come in, but every month, at the end of every month, there's a cut-off date. We put out numbers of where the economy is, what this is telling us on a monthly
Nalin,
basis.
to come back to the conversation, where is the economy right now? How are we doing?
So,
if you look at the overall blue bar, that is the overall asset. So Jan 2025 to December 2025, it's actually slumped back, gone up sometime in October.
This is ATF consumption.
September.
So fundamentally speaking,
the blue line.
fundamentally
The blue line
speaking,
is the overall line.
and I'm going to ask Ishan to speak to the numbers a bit more, but in December, at a very sort of layman level, December we've done better than October and November.
Okay.
Right, Ishan, do you want to talk a bit more?
But throughout the calendar year, it started somewhere at 50 if you look at the blue line, and it's gone up and ended somewhere just below 55 or 53. That's where. So it's largely slipped midway through.
I'm also thinking in terms of quarterly reporting and earnings and all of that.
And then going up. So that's what's happened. So overall,
Ishan,
through
you want to talk a bit more
2025, the economy is remained averaged out.
So
and
let's
at the same
break
level.
it down in the quarterly GDP data. If you look at this side of the things, that's 7.4% growth. This where you see going up is about 8% growth that you saw in the economy, which was the number last time around. Now, there was a dip in October. You know that dip came from the September GST collections and everything.
GST collection and also the announcement of that additional tariff.
And there is this
additional
push
tariff
that comes in from November onwards, which is there, and then December you see some sort of
Additional
Slight
tariff and
uptick.
online gaming also.
Online gaming,
Huge loss.
Good news, which is that the economy is now in a recovery mode after the dip. Therefore, you will get the end sort of Q4 ending better than what you had thought otherwise earlier. So
Does that change
Rahul,
the
I want
way-
to add to what
Yes.
Mr. Kumar is saying. If you look at the heat map, look at the indicators. Look at three-wheeler sales, look at tractor sales, four-wheelers. A number of these indicators, UPI volumes, a lot of that, the fact that they're in green kind of are speaking to what he's saying, that the economy is kind of recovering.
But is that on the back of the GST cut, or is this now reflecting a more fundamental positiveness in the economy? Is this induced in that?
No, so
sense?
I think the GST cut, certainly there was a bump from that. There was a uptick in consumption demand. there is a question mark on how sustainable that is.
That's the
and the
question.
new numbers will show us that.
Yeah.
I think there are doubts about that.
So
certainly, for
let's
how long
throw
it will
this
be
open to the panel. To sustain this green shoots, I mean, shouldn't call it green shoots.
Or the
but
upward
this
trend.
This upward trend. What do we need to do? What does the FM need to do?
Now,
Manufacturing.
if you were the finance minister, one
Yeah.
thing you will do and one thing you will not do.
Well,
That's how we'll wind up this conversation.
What I wouldn't
We're
do
starting
is
with you.
give further tax breaks.
Okay. You will not give further tax.
What I would do is, just like what we've done with the assets of the government, we need to fundamentally consolidate government spending on R&D side so that we can actually invest serious amounts of money in a consolidated way across sectors, which we think will take us to manufacturing leadership in next 5 years.
Right. Ishan, thanks for that. Nalin, come back and you can join us back here. Professor
We
Mehrotra.
certainly must not give any further tax breaks either to the corporates or to the middle class. We should be, on the other hand, taxing the super rich if we want to bring the fiscal deficit down, and even more importantly, budget related, in relation to the manufacturing thrust that we want to see happen. It's actually very important, is something that we haven't talked about. Our economy is still burdened by inverted duty structure, which means that we are importing intermediates at high tariffs, and the finished goods are at low tariffs. As a result, there is a disincentive to manufacture domestically for the larger corporates, and FICCI, CII, etc. have been making a noise about this for the longest time, but this has not changed, and this cuts across a series of very important
So
sectors.
that is something that you would want the FM to address, or if you were the FM, you would address?
Absolutely. It's much more important than PLI.
Okay. Nirupama ji.
I think inverted duty structure, certainly. I think a lot more emphasis on exports now, given where currency is. It's a great time to look at it. And the reason why CADs were, been widening also is because a lot of our inputs are import dependent, which I think we'll need to rethink that at some point, at least if we want to boost our exports. Tax breaks, no, but I think you can rearrange a little bit. I think there are quite a few proposals that are floating around, including couples taxation. I think some breaks
Family income and something
yeah,
like that.
combining. Then maybe reintroducing ATD for the new regime, so that health insurance again gets an impetus in that sense, because that's lost. And also for senior citizens, I think that needs to be really examined. But otherwise, no fresh tax breaks and exemptions in that sense.
So one thing, the three of them are very clear, Rajiv ji, is no tax breaks. So that's the
Also,
one thing they
just
will not
quickly
do.
on one more thing that I would want them to focus on. I think when we're looking at manufacturing, and if we really want to look at it from what is required, I think we need to readjust somewhere and look at becoming more green. It also ties in with everything. We're doing green manufacturing. So whatever you're making, make
Net
it
zero.
green, make it good, net zero. I think that's where our focus
because
should
the European Union is very, very stringent about their net zero levels,
Absolutely.
and in a lot of sectors we'll end up paying heavy duties, and we
because
lack
your
in it,
FDI
especially iron
coming
and
in
steel and some
also
of the
should
others,
be on that nature. Green FDI.
The two things that must be done. One, I've said earlier also, which is some mechanism for actually reducing the regulatory and compliance burden
at the state
in
level.
a tangible, in a time-bound manner at the center and the states. Two, we have not talked about that, which is a huge employment generator and a foreign exchange earner, and which is tourism.
Tourism, yes, sir.
A very good allocation for tourism sector, and actually, specifying which tourist circuits or which area should be done, and giving a reward for that, the tourism sector. And the third thing that I would say is that choose 2 or 3 sectors where you want your exports to be actually ramped up in a non-incremental manner. So you can't do it across the board, it's not possible. Choose those 3 and then work with the private sector to actually ramp them up and grab a better share in the world trade, which has been stagnating at less than 2% for general.
Cultural, religious tourism, adventure tourism, medical tourism, education tourism, wellness tourism. 5 pillars which
but
not being
Anand,
worked on.
it has to be attracting foreign tourists. India gets 9.9 million tourists,
That's it.
while some countries, Spain gets 80 million.
Singapore gets more.
Singapore, interestingly, Shanghai has more 5-star hotels in itself than all of India put together.
We should be clear about this.
Yes.
It's not domestic tourism number that we should be talking about.
Yes.
It's additional foreign tourists who would come, because that generates additional income,
And
which generates the demand and then generates the employment and capacity.
I think quite a few. Number one, focus big way on the energy transition. Mother of PLIs, if you can bring, let us say 2 to 2.5 lakh crores for that, that's one. Second, focus big way for the pollution control of the country.
Yeah.
Life is miserable. That is another big area. Center has to take the lead, come up with very big one. Next to my mind is get after the manufacturing of the right type for the future goods, not for the past goods. Yeah. One more, bring back the disinvestment and privatization. That is something which we have stalled and abandoned. That is the way to get us into the to the business. And lastly, to my mind, which you alluded at one point of time, take the courts problem, the log jam in the courts, as the problem of the public policy, not of the courts, and invest in a big way to create infrastructure for disposal of the courts. What you should not do it, in my judgment, don't come up with woolly schemes like employment oriented scheme or ELI which we came up. Look at what happened to the internship and the other kind of schemes. And also don't invest too much on the capital expenditure which does not prove to be productive. Look at the BSNL, look at the railway capex. They have not yielded anything.
So this entire skill development has turned out to be a sham in the last 10-12 years. The number and the CNAG reports actually show that money was largely looted and not, it was, there was no causal vikas actually that actually
incentives, right kind of incentives.
But so, you know, one thing that none of us are talking about is clamping down a little bit on giveaways. On giveaways.
Freebies.
You know, but, you know, giveaways, I'm not using that word. Giveaways, taxing perhaps even other denominations in this country, talking about farmers. I think the time has come where we have to broad base the net, and of course deregulation. Ma'am, very quickly, if you were FM.
I would like to talk about rural transformation, because that's where a large percentage of the Indians are and a lot of women are there, and if this workforce can be skilled, upskilled, technology can be brought in, startups can be brought in to connect them to the markets, organic foods, frozen foods, processed foods, there's a huge market here, abroad. So I think that's very important. More credit for the rural sector for consumption and also for investment. I would also like to talk very strongly about economic townships being supported more, so that investments can come in, particularly foreign direct investment. And thirdly, I would definitely go in for customs rationalization, lower custom duties, the processes of customs easier, AI enabled. So that's very important, inverted duty structures, whatever we've spoken about. Also skilling in AI and upskilling. Already we have a workforce which is young, employable, but upskilling, reskilling, and a lot of employers are ready to put in more money there, particularly jobs in fintech, in software as a service, exports, and in AI. So these are all areas where I would put more money, expecting the startup system to take over, the GCCs to expand. So these are some of the things I would like to say.
Fantastic.
There are 3 or 4 things to watch out for in the budget. I would watch out for what's going to happen to Manrega spending because of the debate that's happened. So about how much that will change or go down. I would watch out for defense in particular, increase in defense spending and the opening up of the sector in a significant way. We're creating a new military industrial complex in this country of the kind that Eisenhower talked about in the 50s, which has really changed from what was the system maybe even 5 years ago. So watch out for that. I would watch for what's happening on AI. There's a lot of talk around, a lot of initiatives around AI, but let's see what form or shape they take. And on ease of doing business. Ease of doing business is a very much abused term. It depends on which prism we look at it, but let's watch and see what real measures happen on that.
I think multiple sectors have
skills we've talked about a lot, but I think the real thing to be done is to allocate much more on apprenticeship and make sure that these apprenticeship schemes actually take off, because that ensures the skill for tomorrow.
Yeah, and also somewhere define the middle class based on their income across sectors, not only for those who are doing jobs and the salaried class. I think the widening of the tax net and redefining that is
Absolutely
very important somewhere. Now, will the FM be able to manage all of this? We'll have to see. You've heard the Take 9. Now, join us and stay with us right through 1st of February and thereafter as we continue to focus on Budget 2026. To everybody, thank you very much.
Thank you. Thanks.
This is News 18 Network. India's largest news network.
Maharashtra politics in flux after the tragic death of Deputy Chief Minister Ajit Pawar. Well, the NCP is now grappling with the one big question: who next? Sources within the Pawar faction say his wife, who is also a Rajya Sabha MP, Sunetra Pawar, could be elevated as national president of the party. In the meanwhile, his younger son Jay Pawar is also being considered to contest the Baramati by-poll and may even find a place in the state cabinet. Will he take over the portfolios of Ajit Pawar? That question still remains. As the Pawar family weighs its options, a formal communication is also likely to reach Chief Minister Devendra Fadnavis very soon, informing him about the redistribution of Ajit Pawar's portfolios. With Ajit Pawar's passing, the battle for control of the NCP has just begun. Ajit Pawar faction of the NCP, remember, currently divided into two camps. One wishes to remain with the Mahayuti alliance. There's another camp that seeks reunification with Sharad Pawar's faction. In the meanwhile, the BJP is keen to keep Ajit Pawar faction within the Mahayuti alliance. So all of those comments, reactions are still trickling in. Mayuresh, in fact, has been spearheading the coverage for us. He's been getting us non-stop reactions also from the different factions of the NCP. Let's first up hear it.
What exactly had happened? Was that a merger on the card? Was that merger about to happen somewhere around first week in February when the Zilla Parishads Zilla Parishad results were out?
No, both the factions of the party were of the opinion that we should merge because this is the time where if we cannot exist separately, we should merge. And so we had some meetings with Honorable late Ajit Dada, but actually the elections were declared, and so we decided that let us contest first on this symbol of watch, that is Gadiar, and then we can take a second step of merger and all. So that was a prima facie discussion which happened, and all of a sudden this sad incident happened. So now there is a full stop. No, we both are of that mindset, but let us see how the situation evolves or happens in the future. But both are of the same opinion.
What is next for both the parties?
We had been together since last 30-40 years, since the party in the year 1999 we had formed. If the both factions, both the parties, like-minded people, if they try to do that in the same direction, I think some positive thing may happen.
महाराष्ट्र का मालूम नहीं, लेकिन बारामती का तो अभी बारामती कैसा होगा समझ में नहीं आ रहा, क्योंकि अभी एक दादा गया, दूसरा दादा नहीं तैयार हो सकता बारामती में.
All right, a series of meetings taking place currently at Pawar's residence at Baramati. Now, the strong probabilities that currently are being looked at, let's quickly take you through each of them one by one. One thing is for certain, viewers, this has thrown the fate or the future of the NCP into uncertainty. But the first possibility that obviously comes to one's mind is Sunetra Pawar may be made the state party president, which means she may be made in charge of this faction of the NCP. The NCP will retain the post of deputy chief minister. That's the second.